Welcome back to another video, my brothers. So some of you may know that I've been trading Forex now coming up to 6 years. Now I was fucking around for the first 4, so I wasn't treating it with the respect that it needed to be treated with. I wasn't treating it like a business. I was just fucking around, hopping from one strategy to the next, just being casual with it. I made so many stupid mistakes. I'd deposit money, blow the account, deposit money again, blow the account. I didn't have a plan. And that's why I delayed my progress. Now, 2 years ago, I made the decision to really take trading seriously. I wasn't going to fuck around any longer. I saw the potential. I know it's an industry that can make you a lot of money. But for the first time, I decided to treat it with respect. This is no longer a game that I was going to play every now and then. No, I was going to treat Forex like a business. I want to share some of the mistakes that I made with you guys and save you from fucking around for a few years, from making the same mistakes that I made. So let's get straight into it. The first mistake is not having a clear trading plan and strategy. You're just entering positions and praying that you win. You've got to treat the market with respect. You've got to have a clear strategy with a series of confirmations. Before you enter the trade, these confirmations need to be ticked. You're like a pilot. A pilot, before the plane takes off, does his checks. Right, let's make sure this is okay, that's okay, great, okay, brilliant. He doesn't just fly the plane straight away. There could be something wrong. So before you enter a position, you need to make sure that your confluences align. Okay, this is aligning, great, okay, brilliant, okay, market structure break, okay, brilliant, this, that. Once you have your confirmations ticked, then you can enter a trade. And let me add, it's not a guarantee that that trade will be a winning one because the market is random. Even if your technical analysis is spot on, the market can still decide to fuck around that day. So don't get into trading expecting that your strategy will never lose. There is no strategy that wins 100% of the time. You don't need it to win 100% of the time. There are people that are able to make money from trading full-time, winning 4 out of 10 trades. A 40% success rate. Why? Or how shall I say? Because the risk to reward makes sense. Their profits cover their losses. Okay, so eliminate this mentality that my strategy has to win 100% of the time. No, it doesn't. And that's not very realistic. Losing is part of the strategy. Write that down. Losing positions are part of the strategy. Now, I want you guys to make sure that the strategy that you select, you stick with. And backtest that strategy for months. And I'll get on to some more tips in just a moment. But you got to backtest that strategy. You got to get comfortable with knowing what to look for in the market before you enter a position. Okay, backtest, backtest, backtest. So that eventually when you have a live account, you're not just hopping into any random position. You're following your rules. Okay? Eliminate this mentality that there's a holy grail strategy as well. Fuck that shit. There is no holy grail strategy. There are thousands of strategies out there. Pick a mentor, learn from him, and stick with that strategy. Don't be hopping around. Believe me, you'll waste so much time. Now, personally, I like to scalp. So my positions are in and out, 10 pips, 1-to-1 risk to reward. On my runner, I let it go. So a runner is a position that you are allowed to run, as the name suggests. And when I have a position that's a runner, I move my stop loss to break even +1, break even +1. So 1 pip in profit. So then if it reverses against me, I'm okay. I'm not going to be worried. I can go about my day and not stress. Okay. The second mistake is over leveraging or taking on too much risk. You're excited. You've got an account with 1 to 500 leverage and you just whack on massive trades. Thinking, yeah, you know what? If this one ends up being a winner, I'm going to double my account. Stupid idea. And that's not how professional traders trade. Okay? They have excellent risk management. Ideally, you don't want to be risking more than 1% of your account at any given time, because you want to ensure the longevity of your account. You know, in the early stages of my trading career, I'd deposit money, I'd over leverage, I'd whack on a huge position. I may win 2 or 3 trades in a row. And that justifies how I start feeling like the fucking Wolf of Wall Street. You know what? Yeah, I am the fucking real deal. Look at this. Look at this position right here. And I keep adding more and more positions or increasing the lot sizes. And eventually, boom, one trade wipes out all of the profit. And not only all the profit, the entire fucking account. So you need to ensure that you have excellent risk management. You know, people always ask me this question, Ali, isn't trading risky? Of course it's risky. It entails risk, absolutely. However, if you have excellent risk management, you ensure the longevity of your trading career. You're not panicking. If you go to bed panicking, it probably means that you have a big position open with no stop loss. That's why you're rolling around in bed thinking, oh shit, what if I wake up in the morning? It happened to me once. I had a position open and I thought, yeah, by the time I wake up, boom, I'm going to see that blue position on MetaTrader 4 and I'm going to be happy. I woke up and my account was this close to being blown. What ended up happening? I blew the account. Okay? So you got to make sure that you have excellent risk management. The next mistake is trading every single currency pair. You don't need to trade every single currency pair or every single instrument. You don't have to. Stick to one currency pair. That was one of the most impactful pieces of advice that I received when it came to trading. I was trading GJ, I was trading Euro USD, I was trading the Swiss franc and the dollar, and I was just involved in every single currency pair. And that leaves your mind stressed. It's like opening so many tabs on a computer. It slows the computer down if you don't have enough RAM, right? Your computer starts to panic and the fans start kicking in, okay? It's much easier for you if you focus on one, at max 2 currency pairs at a time. But 1 is what I would recommend that you stick with. Pick one currency pair, one session. That's it. Simplify trading. That's what the best traders do. They simplify their trading routine. So instead of looking at 7 or 8 currency pairs, looking at gold, looking at US 30, they just stick to one currency pair or one instrument, okay? So simplify it. The next mistake is ignoring the impact of emotions on your trade. Your emotional state of mind will impact your trading performance. Absolutely it will. And this is something I learned from Mark Douglas in his excellent book, Trading in the Zone. In this book, he talks about why it's very important to be self-aware. If you're frustrated, if you're angry, don't trade. If you had an argument with your spouse, don't trade. Because you might end up taking positions that you wouldn't have otherwise taken. Maybe you want to take out your frustration on the market. The market doesn't give a fuck about what argument you had with your spouse. The market is the market. Okay, a lot of people end up revenge trading because, the market punished them 3 or 4 times in a row. Well, I say the market punished them. The market doesn't do anything other than just be the market. It doesn't have a particular agenda against you. But some people get angry and they're like, okay, it's personal now. I'm going to fucking trade my way out of this position. You're going to give me the results I'm after. The market ain't going to just give you what you want just for the sake of it. Okay? Or even when you reach the state of euphoria, if you're extremely ecstatic, you've won the last 6 trades in a row, be careful. Because you might start thinking you're invincible and you can do whatever, and you start adding more positions than you should have added. You start tripling the lot sizes too soon. And then boom, you have a series of 2 or 3 losers in a row, and that wipes out all of the hard work prior to that, all of the profit. Okay? So be very, very careful. The next mistake is not looking at the news before you trade. Now, I'm not a fundamental trader per se, so my strategy isn't heavily impacted by the news. So I don't spend an hour or two looking at the news and what's going on. However, I do look at what's happening that day, just in case there's high impact news which could completely take me by storm, take me by surprise. You don't want to be blindsided, as they say. You don't want to be like, whoa, shit, what the fuck happened? You got to make sure that there's no high impact news. There's a great website, MyFXBook, and it basically breaks it down into folders for you, categories. A red folder is high impact. An orange is medium impact, and then green is low impact. It's usually the red that you need to look out for, sometimes medium. Now, if there's a red folder, so if there's high impact news, I don't trade when the news event comes out. I trade after. Before is a bit risky because you might be stuck in a position and, so I trade after the high impact news. Okay, so just be aware of what's happening that day. Open my FX book, have a look. Okay, high impact news at 9 o'clock. Okay, let me trade at 10 o'clock when the market's calmed down a little bit. Because when there's high impact news, the market just does whatever the fuck it wants. You might be on the lucky side of that, but you also might be taken out badly, especially if you don't have a stop loss. That could wipe out your entire account. I mean, sometimes during the news, the market moves hundreds of pips in one direction, which, like I said, could put a massive smile on your face, but it could also make you absolutely traumatized if you don't have a stop loss, okay? The next mistake is treating Forex like a get-rich-quick scheme. You approach the market, I need to get rich quick. Or maybe, for example, you lost your job, and so you're using your savings to support yourself. Big mistake. One thing I always say is, if you need the money, don't trade. Because you're going to trade out of desperation. Secure a job, get a job. Yes, I know a lot of you guys are like, that's the whole reason I started trading, is so that I don't have to work 9 to 5. Yeah, but if you're new to trading, if you don't have savings put aside, you're going to be in that desperate state of mind. You're going to be extremely anxious because you need to pay the bills. You need to put fuel in your car. So you're not going to be trading from a place of contentment and confidence. Oh, you're going to be anxious. Oh shit, this better go my way. I got to pay for my rent this month. So not a good idea. Okay? Keep your 9 to 5 job. If you have a desk job, a remote-based job, that's great because, you can just quickly mark up the chart in the morning. You can set reminders so you don't have to be stuck to the computer screen all day, every day. No. Mark up your chart, set some reminders when price gets close to where you need it to get to. Boom, you get a message on your phone, you get an alert. You can now get ready to enter the position, okay? But if you need the money, don't trade. Believe me, you're going to be extremely anxious. So if you've got a job that pays you a respectable amount of money, great. If you don't, I encourage you to get one. Get a job, ideally if it's computer-based sales job, account management job, that's great. Because, you can be next to your computer. Obviously, if you're working in a factory, it's a bit harder because you have to go somewhere, get your phone out, whatever. But yeah, having a job is a smart thing to do. Eventually, when you've been trading your strategy for quite some time, you've put some money aside, well, then you can start thinking about trading full time. Okay? And finally, the last mistake on here is comparing your trading journey with somebody else's. I mean, comparison in general is never a good idea in life. As they say, comparison is the thief of joy. But if you're looking at what this person's doing, oh shit, how come he's made this much today and I haven't? And then you start looking over the fence. You start thinking, maybe my strategy is not good. Maybe his one's better. You start learning his one. Turns out it's a completely different strategy. It's going to take you a while to learn. And it just completely disrupts your progress. As I said earlier, pick one strategy, backtest the shit out of it, and stick with it. It doesn't mean that after a while of trading that strategy that you can't incorporate aspects of another strategy, put aspects of it in, remove aspects of it out. I mean, you can sort of modify your strategy after some time, but the mistake I see a lot of new traders make is they keep switching strategies. Okay, stop looking at what somebody else is doing. Stop looking at where they are progress-wise. Oh, this person made 6K today. What the fuck? He's my age. How comes I'm not doing it? I must be a retard. Don't be saying that to yourself. Stay in your lane. Your time is coming. Focus on becoming as competent as possible. Backtest, backtest, backtest. Hopefully, you guys have found this video valuable. I know not all of you trade Forex or are interested in Forex. I may create a second channel or I may create a group where I share some trading related content or potentially a course at some point. So thank you all very much for watching this video, and I will see you all very soon. Take care.